Hi everyone, I've got a terrific video for you today. It's all about trade entries, and I've got a step-by-step plan for you for all the things to consider whenever you are ready to enter a trade. Now, I want you to look to my right over here. I've got a lovely young lady who's trying to enter a trading room, and on the other side of the room are a bunch of experienced traders who are making lots of money. So here we have a trader who's entering the room trying to gain access to it. And first of all, we hear a knock knock. Now I've got a story for you I want to share with you, and I'll tell you where I'm going with this in just a moment. But first of all, we hear a knock knock. Okay, and on the other side of the door, the trading manager says, "Who's there?" The new trader, okay, this lovely lady here, she says, "Trader wants to open a new trade." The trading manager just replies, "What's the password?" The new trader says, "Well, I want to make money." Trading manager now says, "Access is denied. Please go away and learn how to take a proper trade entry." Okay, the story I just shared with you does illustrate something really, truly important. I mean, the easiest thing to do in trading is to actually enter a new trade, right? So on the trading platform, the MT4 platform, which we're using, you simply pull up the window to take a trade, and you can either sell by market or buy by market. All you have to do is just click on there, and instantly you're into a trade, either a sell trade or a buy trade. So, like I said, that's the simple thing. But that's exactly what the real problem is. It's why most traders fall into the 90% group of losing traders. Okay guys, this is me. My name is Martin. I'm a proud Canadian trader. You can see that here below, and this video is going to hit home with a lot of you people. Even though you may know, you may think that you know how to take a trade entry, most of you really don't, and I'm going to give you all the information. It's what you need to know whenever you want to open up a trade. Okay, the very first thing I want to explain to you and share with you is that you just cannot take a trade whenever you feel like taking a trade, okay? You need a good reason to trade. You just can't enter a trade whenever you want. You can't just enter a trade whenever you open up your computer, or whenever you see price go up or down, or whenever you see a big bullish or bearish candle. Now, how many of you have entered a trade after you've seen the market go up and you're thinking it's going to continue going up, right? Well, big mistake, because the market most likely will turn right against you right after you see this big bullish or bearish move. You can't just open a trade whenever you're bored, and I know a lot of us do that because we're watching the computer all day, and you just get bored silly. So you just want to do something. The overall aim obviously is to make money, and you're saying, well, if I don't open up any trades, I can't make any money. So you open up a trade, and you're wrong most of the time. You can't open up a trade whenever you feel lucky. I mean, a lot of us, perhaps we've opened up a trade, we've had a win, and all of a sudden we see something else on the charts, and so we open up another trade. We feel lucky, we're on a winning streak, but again, that soon stops. You can't open up a trade whenever you get a tip from a trading forum. How many of you actually go onto some of these trading forums on the internet, taking a look at somebody else's expert's opinion, right? There are a lot of experts out there, however, they're not always right as well. So you just can't take a trade when somebody else tells you that they're taking a trade. You've got to have a good reason to enter, and that's what this video is all about. So I'm going to explain some of the decisions you have to make when it comes to taking entries. Okay, the best thing I can teach you is for you to understand a step-by-step process for considering a trade entry, and I call this the 4 W's, okay? And they are what, who, where, and when. And if you can ask yourself these questions anytime you feel like entering a trade, you're going to find that this is going to help you tremendously. In the first place, it's going to help you stay out of bad trades, and secondly, it's going to help you get into trades early enough that end up winning for you. So again, the first question that you have to ask yourself is, what is the market doing? Okay. Second one is, who is in control? Thirdly, where is the market right now? And the fourth question you have to ask yourself, when can you consider a trade entry? Now, over the years, I've talked to my students, and I've trained them to anticipate trade entries. And if you can ask these 4 questions, okay, then you are well on your way. You're well on your way to anticipating a trade setup. Okay, let's start with the very first question, the very first decision you have to make. What is the market doing? Well, there are only 3 market conditions that can give you a market directional trading bias. Now, the word bias means the overall sentiment of the market favoring either price going in one direction or another. That's called a trading bias. And when it comes to directions, price can either go in an uptrend where price is going higher, in a downtrend where price is going lower, and sideways where market is ranging or it's non-directional. Okay, now this is your very first important entry decision, and it is so important because everything that you do after here when it comes to trade entry, which really is your trading strategy, is based on this very first question. So it is the most important part of the process in choosing what you're going to do. And I'm going to show you, we're going to go to the charts right now, I'm going to show you how quickly and easily you can understand the proper market directional trading bias. Okay, so whether we're in an uptrend, downtrend, or sideways, I've got a really simple way for you to do this, and let's look at the charts. Okay guys, let's take a look at a typical chart here, and I believe this is the Australian New Zealand dollar, and I want you to see one thing. I've got one big thick line on the chart. You can see that right now with my pointer, and this is going to give me my directional trading bias. Okay, and it is so simple that anyone can do this, and you're going to instantly be able to tell whether we are in a downtrend or in an uptrend or in a sideways market. Now, first of all, you can see here, let me just get my drawing tool. You can see here, price is below this line here, price is above this line. Okay, price is below this line, price is above this line. Okay, so quite simple. When price is below this line, we are in a downtrend directional bias. Here we're in an uptrend directional bias, downtrend, uptrend. Okay, now how simple is that? That's pretty cool, right? Anyways, I'm not going to give you the exact strategy and the rules in this video. I'll perhaps do that in another video, but you're going to have to play around with this line and find the indicator. You can definitely find this indicator. It's free. It's on the internet, and it's just a moving average. That's all it is. Okay. However, it does change color. You can see it goes from red for downtrend, green for an uptrend, red, a bit of sideways here, up again, and down. You can see, and then changes back for an uptrend on the green. So I've changed the settings on this common indicator to show this, and I'll just give you an idea. For the moving average, a very common one is a 50 moving average, like 50 simple moving average. Other common ones are a 34 moving average, or an 89, or even 100 simple moving average, 20 simple moving average. You're going to have to play around and see what works for you. But again, it's really, really, really simple. And I want to just erase that for a second. You can see as we go along here, again, price changes from an uptrend to a downtrend, pay attention to that candle right there. Pay attention to that candle right there. Okay, as it crosses over. This is not it's not a moving average crossover. It's not that simple, guys. This is, I've changed the settings here, but it does give you very, very simple visual settings as to whether we're in an uptrend or a downtrend. And that's simply what we're trying to satisfy in answering our very first question. So what is the market doing? Again, you can see here, change from up to down right here with this candle. We are definitely in the downtrending market. Here with this candle crossed above this line, we are in an uptrending market. Here again with this candle, downtrending market. Okay, and it is that simple. Most traders make things really complicated. They're looking for fancy entries. I mean, there's so many ways to enter a market. One, there are breakouts, there's joining a trend, there's momentum ways to enter a market, using support and resistance, entering trends off of trend lines, using things like Fibonacci, which form levels which you really can't see unless you use the Fibonacci tool. How about taking trades on breakouts of triangles and looking for other patterns like head and shoulder? I mean, that's a lot of work involved. If you don't want to do all that, well, this guy's, for me personally, is one of the simplest things you can do. So this answers the very first question, and let me just take that off, and we're going to now go to the second consideration. Okay, again, this is pretty simple. The second question here is the second W. Who is in control? Okay, again, there are three answers for you to consider. One, we've got buyers. Buyers in control. The buyers are the bulls in a strong uptrend. Sellers, they are the bears in a strong downtrend. And how about this one? No one is in control. You're waiting for one side to take control. So neither the bears or the bulls in control. Now, once you answer the first two questions clearly and definitively, you've got to be able to do that quickly, clearly, and definitively. You can now get ready to apply your entry strategy. Okay, I've opened up another chart. This is the British pound Australian dollar here, and again, based on this one simple moving average line, which does designate an uptrend from a downtrend. Okay, so super simple to see. We now look to see who's in control. Okay, so when we have bullish candles like this, obviously the bulls are in control. Okay, let me just take that off for a second. When we have the bearish candles here, we can say the bears are in control for the time being, but since we're in an overall uptrend, the bulls are still in control. Okay, again, bulls in control over here, bulls are in control over here. Okay, here we have one bearish candle, but generally the bulls are in control, and the bigger candles are to the upside, which the bulls control, are first of all in white in color. Okay, they're white in color, and secondly, they're generally bigger than the other candles. So here you can see a series of three or four huge white bullish candles. Clearly we have strong momentum. The bulls are in control. Bulls finally exhaust themselves. Sellers come into the market right here, take it down a bit, and then we go this way. Okay, so again, we want to see who's in control, and that determines our actual entry, where we're going to enter the trade. But the very first thing I always want you to see is the moment the color changes, we look at the first candle that either crosses or just right after that. Okay, so in that case, in this case, it's over here. Let me take that off. In here, it is over here, and here you can see it's over here. So this is very important, and that in itself is an entry strategy, guys. As long as you've got some other confirmation indicators below, such as the momentum, which agrees with the direction of the overall dominant trend. Okay, and here again you can see we have momentum to the downside again with the overall dominant trend, which has changed from going up to going down now. Okay, now we have another indicator down below, and again you can find this, by the way, both indicators you'll be able to find on the internet. This is a momentum indicator, one of the ones I love using. Does give us a really good picture as to what's happening on the chart. Is the MACD. Again, you'll have to play around with the settings to get the settings, and once you find the trend here, you might want to change the settings to match as closely as it can to what you see is happening on the chart. Again, this kind of combination here, using an indicator for confirmation along with this moving average, is a super powerful formula for getting to trades as soon as possible and then riding it up for as many pips as you can. Okay, now this one is a volume type of indicator. Again, I'll make mention of these in the video below the video, so you know, at least I'll give you the names of the indicator that you see on the charts. Okay, I believe this is called the Wada Attar explosion. It just tells you when there's more volume coming into the market, which could confirm your entry right over here. But that's not it. That's just an idea so far. Okay, I'm just giving you something easy for you to understand. And let's take a look at question number 3, which is super important. Okay, before taking a trade entry, here's the third consideration. Where is the market right now? Now, in my previous videos, I did talk about waves and cycles, and I'll post some of those previous videos underneath this one. I would like you to go back, if you haven't done so, and take a look at some of my previous videos. But basically, price moves up and down in waves or cycles. Trends have 2 cycles. Either, like if you're in a trend, you're either cycling higher, going up, or you're cycling down, where price is coming down. And this is all within a trend. Okay, so in a trending market, price is doing one of 2 things. The first thing is price, there's a trend continuation. So in an uptrend, okay, pay attention, in an uptrend, price is cycling higher, and that is called trend continuation. Or if it's cycling lower in a downtrend, that is trend continuation, right? Okay, and I'll give you an example of this in just a moment. Or the other thing price can be doing is retracing or pulling back. Okay, so in a downtrend, price could be going, like if price is coming down, price could be going higher. Okay, that's cycling higher before coming back down to join the overall trend. Okay, and it could be cycling lower in an uptrend. So here's the uptrend. Okay, price and so it cycles lower, so prices come up high, comes back down in a retracement or pullback, and then continues with the trend again. Okay, so that's what this is all about. Let me again go to the charts. Okay, just hold on. Okay, I'm going to be explaining the concept of market phases cycling up and down, okay, and this is a consideration for your trade entry. So here we have an uptrend, okay, and price you can see goes up and then comes back down. So that's cycling up, cycling down, cycling up, cycling down, cycling up, cycling down, okay, and this is super important because it depends on whether you're an aggressive or a conservative trader where you actually want to enter. So the first thing we want to say to ourselves is we want to take buy trades, and that's the reason for this big solid line. Okay, so as soon as you see the green, the buy trade would happen there. That's your earliest entry. Okay, and now price is cycling up, price is cycling down. You may want to get in again. Now we're talking about a trend continuation. So trend continuation means that we're now going to continue with the trend going higher. Now we're waiting for price to come back down again, getting in again, and again riding the trend higher. So again, this is a trend continuation type of trade. We never want to take sell trades. Sell, no, no, no. Okay, so big X on that. We don't want to take sell trades in an uptrend. Okay, let me just take that off and let me move on. Okay, here again, and this repeats itself over and over again. So here in a downtrend, this could be the candle for an early entry. That in itself is a trading strategy. We ride the trade down, and then all of a sudden price is cycling up again. So price is cycling higher in a downtrend. We wait and then get in, and we come back down again. So now price is cycling down, okay, in a downtrend, cycling up, cycling down, cycling up, cycling down, okay. And this is the beauty of this system here of understanding where to get in and when to get in. So again, we never, in a downtrend, we don't take buy trades. We're only considering sell trades because this line is coming down. You see, price is below this moving average, and we don't want to take buy trades. We only want to take sell trades, either here early on or in a retracement or pullback situation. Okay, same here. Here's the early entry. This does not cross the green at all. However, we may want to look at this, and this may give us confirmation that price is going to go higher. If you didn't get in here, then you wait to here, take a look, okay, and everything seems to be fine for confirmation that the trend is going to continue going higher, okay. And take a look. We're just following the green line, which tells us that the the bulls are in control, and that we're looking for buy trades only. Okay, now let me just take that off. Okay, guys, this is the last important question. It's another W you can see here. So the question that you have to ask yourself is when to enter a trade. Okay, now this depends on your trading style. I already mentioned this. Entries can be different whether you're conservative or an aggressive style trader, and you should all write this down on a notebook and have this beside your charts whenever you're trading. Conservative traders generally look for trend continuation setups. They enter trades later in the trend with more confirmation, or in breakouts in the overall dominant trend direction. So if the overall dominant trend direction is up, in other words, the buyer's in control and we're looking for a buy trade, then you're waiting for confirmation to get in on a trade for a trend continuation, okay, trend continuation, or a breakout of a previous swing high, okay. Now, aggressive style traders generally look for retracement or pullback setups in the overall dominant trend direction. So they can still enter trades early, really early in the trend, and I showed that to you on the previous chart, as soon as new trends are established. A new trend is established, remember, with the big solid moving average, in my case, on my chart, showing from red, which is downtrend, changes to green for an uptrend. The green then changes to a red, back down to a downtrend. So that's a simple super way to take a look at the trends, and for you to understand when price is above the moving average, let's say above the green, you want to take buy trades. When price is below the moving average and the moving average is red, then you want to take sell trades. You never want to take trades in the opposite direction. And I did forget one important thing. We do trade on the daily charts. We try not to trade on small time frames. That's you're taking a bigger chance, and there's a lot more noise and room to get into some bad trade setups. So trading on the daily time frames is one of the best things that you can do. Okay, now finally, when you're ready to enter a trade, use momentum and volume indicators to confirm very good trade setup. Okay, I've got the Euro USD daily chart up here, and again, just showing you when to enter a trade depending on your trading style. So again, getting out my drawing tool, you can see the moving average here changes from the green to the red. So when you see the red, you basically just want to take sell trades. You're not interested in buy trades at all, right? Okay, so the very first candle or early candle is here. You could take a look. Here it's not that clear, but even if you got in, your stop loss would be here. Price would have gone sideways for a while and then gone down. Here, this is really good trade entry right here, and again, price goes down. Okay, now we're cycling down, we're cycling higher again. Okay, and we're looking for another trade entry. So conservative trader would wait for a good momentum candle in the same direction as the overall trend. Here it's down. Here's this big momentum candle. You can see that with the big tail here, getting in right there, and guess what? Riding it all the way down. By the way, this little squiggly line, this was disclosed in a previous video. That is an indicator that you can use for your stop loss, trailing stop loss, and I'll have mention of this below this video as well. So you can see you would have gotten in here, you would not have been stopped out, and you would have made all your pips from here to here, quite a number of pips, right? So using this single solid line will keep you into more better good trades for a longer time and keep you out of the bad trades. And even if you're losing, your losses will be small compared to riding with the overall dominant trend. Okay, so I just want to continue along a continuation trade. Let me just get rid of that. So here you can see price comes down, price comes back up. Taking a look right here at this candle, this again would be called a continuation trade. Okay, and conservative traders look at trading this way or breaking a previous swing low, and this is called a breakout right over here. So again, making some pips this way. So again, conservative traders look for retracements and trading when price starts going in the same direction as the overall trend or with a breakout. Okay, let me just remove that and continue here. Now you can see here on the uptrend, okay, it's turned green. Price really went sideways, came back down in retracement, okay, and an aggressive trader, by the way, aggressive trader looks at trading the retracement and taking a buy trade. Let me just take this off. A buy trade on a bearish candle. I have a general rule of either waiting one or two candles, but two candles right here, getting in right there. Stop loss would have been here, and look at that. You would have ridden all the way up to here. Okay, so aggressive traders really aggressive traders look at getting in on bearish candles, okay, and conservative traders, let me just remove that. Conservative traders wait for a resumption in the overall trend. Okay, right here, take a look, confirming with the indicators below, and guess what? Again, doing the same thing, riding for as many pips as possible. Here again, trend continuation. Here, take a look at previous swing high. This candle is a breakout. So conservative traders look for breakouts and trend continuation, whereas aggressive traders look for bearish candles. Okay, I wouldn't have gotten in here since we did close just below the line, but there are many other opportunities to see what I'm talking about. Let me just continue. Okay, so here, let me just get my drawing tool. So a aggressive trader might have gotten in here, buy trade, or here a buy trade, and then again getting in really early and riding up for as many pips as possible. So that's the difference between aggressive and conservative trading entries, and hopefully you understood that. I may make another video in the near future with more examples of charts and exact rules that you can follow. Okay, guys, I know this video is a bit longer than I want to make, but we're almost finished. So this next thing I want to mention is fear and greed. By far, the biggest problem that faces a trader is keeping a healthy balance between fear and greed. So the very most important thing that you can do is a good manual entry will keep your emotions in check. So if you can understand and devise a entry strategy that is manual based on what you see in the charts and confirming with some indicators, the indicators being momentum and volume indicators to give you the extra confirmation, this will get you much further than most traders out there and will keep you out of the 90% club of losing traders. So without an entry strategy, you should not be trading, and that's what this video is all about. Hopefully you enjoyed the video. Again, cheers from me, and I want you to subscribe and click on the like and comment buttons below the video. If you really like the video, I'll be doing more like this in the near future. So take care, everyone. Happy trading, and we'll talk to you again soon. Bye for now.